Hi everyone, welcome to FinTech Academy. This is Harsh. Today I will be going over the Canadian income tax T2 topic, which is what is a corporation and what are the types of corporation in Canada. All right, so let's first understand what is a corporation. There are different types of corporations for tax purposes, and you have to select the one that accurately describes your corporation type at the end of the tax year. The corporation type determines whether or not the corporation is entitled to certain rates and deductions. While sole proprietorship and partnerships can be easier and less expensive to create, the corporation offers increased liability protection and creditability. A corporation is a legal entity in itself and is taxed separately from the individual. There is a corporate tax for corporations who do business in Canada. Corporate tax is the federal and provincial income tax for corporations. Federal income tax is filed as a T2 corporate return, but each province has their own way of handling the provincial income tax. All right, so the types of corporations. So the first is Canadian Controlled Private Corporation, or it is also called CCPC. The next thereafter is Other Private Corporation, which is also a different type of private corporation. The next is Public Corporation, of course, which is listed publicly. The after one that is Corporation controlled by a public corporation. And the last, which does not fit in any of those, is called Other Corporation. So there are five different types of a corporation that can be set up, with, of course, the most common one, which generally starts off for a small business or a private business, is the CCPC, which is also called Canadian Controlled Private Corporation. All right, so let's have a look. What are the benefits of a Canadian controlled private corporation? The biggest corporate tax advantage of being a Canadian controlled private corporation is being eligible for the small business deduction. And that's where the rate gets slashed for the CCPC. Of course, there is a limit. The CCPC is subject to a lower tax rate for the first 500,000 of taxable income. So there is a special rate for the first 500,000 for and that is called the small business deduction for a CCPC. The CCPC benefits from an enhanced and refundable, partially or entirely tax credit for its scientific research and experimental development expenditures. So if there is an organization in that, then they do get a benefit on that. The CCPC is subject to favorable treatment with respect to stock options issued to its employees and capital gains exemptions. An additional month to pay the balance of taxes payable. These advantages can significantly help lessen your corporate taxes. So the above are some of the basic advantage to a Canadian controlled private corporation. As stated in the first one, that it has the corporate tax advantage. And we'll see on the next slide what is that benefit that a CCPC via small business deduction they get it. All right, the small business deduction for CCPCs. Well, right over here, we can see that description, which is right on top for several years, right? But if you look at the most last three, which is 2019, 2020, and 2021, it has been pretty much constant with that rate. So first, initially, part one is 38% income tax, but then there's a 10% tax abatement, so it goes down, and let's say it becomes 28% over there, and then there is that small business deduction that kicks in of 19%. So basically the federal tax rate is 9% for a CCPC. So for it's the federal level, and of course there is a component of the provincial level as well, whichever province that you are doing business in, or whichever the province the CCPC is registered. So for example, if a CCPC is in Ontario, then the 2021 rate is 3.2% for CCPC, which is 9 plus 3.2, that takes it to 12.2% as a tax rate against the tax rate which a general business would be 11.5% plus 15% of the federal, so that'll take it to 26.5%, whereas the CCPC enjoys 12.2% in Ontario, and every province has their tax rates accordingly, but this is what is at federal level for everyone, which is 9% of the CCPC tax rate because of the small business deduction. Right, guys, so there was just a quick introduction about what is the corporation as well as the small business deduction for CCPCs in the income tax for the corporate T2. Now, of course, corporate T2 income tax is huge. This is just a little bit glimpse of how things can be in the T2. Still, there is a lot of details about what is the small business deduction in itself, and then there is general rate, as I just described as an example, of 26.5%, and then there is on top of that there is investment income, which has a separate rate. So overall, corporate income tax T2, a huge topic, of course, and we do teach that. But if you found this video helpful, you can certainly like our video and subscribe to our channel for more videos. Also, let me know in comments what would you like to see in future videos, i.e. Harsh, I want to see this video, or Harsh, can you make a video on this topic for accounting and bookkeeping, QuickBooks Desktop, QuickBooks Online, Excel, Canadian Income Tax T1, Canadian Income Tax T2, or Canadian Payroll. Also visit us at fintechsolutions.ca for our courses. Thanks for watching.